Hey folks, Simon here with your Tao Daily update for November the 7th, 2024. The markets yesterday had a strong session. All right, the market S&P had the best election day gain on record, up 2.5%. Big gap and go pattern here. New all-time highs, hit 590, closed at 591. Everything looks pretty amazing. All right. Now, Trump trades are in full flight. Okay, if we look at the financial sector, XLF was up 6%. KBE, which is the banking ETF, was up 12%. KRE, regional banks, up 13.5%. These are stunning moves, all on the premise of light touch from Donald Trump. So not moves that I'm at all interested in chasing. What we saw yesterday was a very strong vote in favour of growth. All right, if we have a look at the market map, you can see the sectors that performed were tech, financials in particular. Tesla up 15%. I think it would have been down a similar magnitude had Harris won. Communications was strong. Energy was very strong. We'll look at that again. Industrials very strong. Now, consumer defensives were weak. Healthcare was weak. Real estate was weak. Utilities were weak. All right. So what we're seeing is the market is dumping defensive sectors like real estate, utilities, healthcare, consumer defensive, and aggressively bidding up the growthy sectors, things like, and cyclical sectors. Okay, cyclical sectors like industrials and financials, growthy sectors like consumer cyclical, technology, communications. And despite the very, very strong day that we had, 2.5%, that's a big gain. It was only a 60% up day, which means only 60% of the volume was in issues that closed higher on the session. So it just shows you the market very, very much focusing back towards growth, and that's just largely premised on the promised tax cuts. Right? Tax cuts actually do have a very good track record of delivering higher growth. If you look at the bond market, TLT, which is kind of our favorite proxy for the bonds, that got crunched. That was down another almost 3%, and 10-year bond yields heading back up to 4.5%. They finished at 443. They almost touched 450 on the day. This is a result of A, an unwinding of the growth scare that we were going through a month ago, and B, the market sort of saying, well, higher growth and probably higher inflation means we need higher bond yields. All right, and higher bond yields are putting a bit of a lid on precious metal prices. Gold got crunched yesterday, and this is because when you've got higher rates, higher yields, the opportunity cost of holding gold becomes higher because, of course, gold doesn't pay any yield. So it looks like Trump mania has gripped the markets. That is even what I called my members video today. Now, I suspect these trends will continue, albeit I do not expect things will move in a straight line from here, particularly financials. When you look at a stock like Goldman Sachs that finished up 13% yesterday. That is a stunning move for that stock, all premised on the idea that Trump will go easy on Wall Street. But that is a huge amount of potential outperformance that's been pulled forward into one day. So certainly in buy the dip mode, but whether it continues to move from here, I'm not so sure. Anyway, that's what I got for you. I hope it helps, and I'll catch you next time. Thank you.